The US dollar/Canadian dollar exchange rate is vulnerable when its opening range breaks in January. US dollar to Canadian dollar attempts to retrace the decline following the US non-farm payrolls report as it bounces back from a fresh monthly low, but failure to defend the opening range for January raises the scope for a further decline in the exchange rate, as it carves a series of lower highs and lows. Advertisement USD/CAD appears to have reversed course after failing to test the December 2020 high, and the decline from the 2021 high may develop into a broader correction as the update to Canada's employment report puts pressure on the Bank of Canada to normalize monetary policy. The ongoing improvement in Canada's labor market may encourage the BOC to adjust the forward guidance for monetary policy, as the central bank acknowledges that broad-based job gains in recent months that have brought the employment rate essentially back to its pre-pandemic level. As a result, the BOC may follow a similar path to its US counterpart after concluding its quantitative easing program in November, and it remains to be seen if the central bank will prepare Canadian households and businesses for higher interest rates. At its next meeting on January 26, as Governor Tiff Macklem and company pledged to provide the appropriate degree of monetary policy stimulus to support the recovery and achieve the inflation target. Until then, US dollar to Canadian dollar may face a larger correction as it fails to defend the opening range for January, but a further decline in the exchange rate may fuel the recent flip in retail sentiment like the behavior seen during the previous year. The IG Client Sentiment Report shows 65.87% of traders are currently net long US dollar to Canadian dollar, with the ratio of traders long to short standing at 1.93 to 1. The number of traders net long is 6.49% higher than yesterday, and 31.99% higher from last week, while the number of traders net short is 20.2% higher than yesterday, and 2.72% lower from last week. The jump in net long interest has fueled the recent shift in retail sentiment as 46.25% of traders were net long US dollar to Canadian dollar in mid-December, while the decline in net short position comes as the exchange rate bounces back from a fresh monthly low. With that said, the decline from the 2021 high may develop into a broader correction as US dollar to Canadian dollar fails to defend the opening range for January, and the exchange rate may continue to depreciate over the coming days as it carves a series of lower highs and lows. Source: Trading View. Written by David Song, currency strategist. Follow me on Twitter at @DavidJSong.